A system which is centralized and federally driven or federally controlled, we believe may not be what maybe is so beneficial or help us achieve what we want to achieve in terms of creating the impact in the lives of Nigerians.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. Recently, Proshare, Nigeria's foremost financial and economic intelligence platform, released its flagship economic outlook report for the year 2026, tagged Hope and the Politics of Economic Recovery. The report provides an outlook for 2026 anchored in geopolitical shifts, continental peculiarities, policy discipline, and sustained structural reforms. Joining me in the studio for this conversation on Nigeria's 2026 economic outlook, Hope, and the Politics of Economic Recovery is Mr. Terver Audu, a macroeconomist with Proshare. Thank you for joining us, Mr. Terver Audu.
Thank you for having me.
Now let's first begin with what the report identified as a recovery for Nigeria from the risk level, some improvements in the macroeconomic indicators. Can you expatiate further on this?
So basically what the report does is to point out the need for us to appreciate the fact that there have been certain positives that have come out of the series of reform sequencing from the Tinubu's administration, the current government, I mean. And some key areas, we've seen notable progress in some key areas, and some of which are the progress we've seen in terms of external price and liquidity recovery. And what I mean by that is the impact which the reforms have had on our FX market position. We see that our exchange rate is more stable, more market reflective FX rate. Arbitrage has thinned out from the market. Look at things like our FX premium levels have actually thinned down to 2%. I think about 1.8% currently, from way over 60% some periods back. Now, all of this, it's because of the FX reforms, which our report recognizes as the most successful of all of the reforms we've seen so far. So we look at the position of our reserves. Our reserves, gross reserve, have maxed to $44 billion. And, someone might say, the question could be, okay, what's really driving our reserves? But when we then look at it from a net position, where in 2024, we ended the year at around $23 billion net FX reserves from $3 billion some years back. And by all indications, if our FX premiums have thinned to around 2% and our PDO levels, our past due obligation levels, have actually shrunk, then there's every possibility that by the end of this 2025, the net reserve position would be close to $30 billion. We also understand that we're getting recovery from domestic position. When you look at the domestic prices and liquidity too, there's more confidence returning to the market businesses. When you look at our PMI numbers, way above 50 throughout this year. You look at the fact that inflation is moderating to 14% from 24% earlier in the year. So inflation has consistently moderated. The central bank is becoming gradually showing signs that, okay, we're moving to a dovish position. All of this collectively help companies operating and businesses operating in the system, because the high level of exposure, the high level of risk, and level of the confidence level was very weak when you look at where we were 2024, 2023, where the risk position of the economy had climaxed. So currently, we believe that these are macroeconomic indicators that should be appreciated because there are positives here. But there are also questions that we ask. The report raises key questions. For instance, have these indicators, have these reforms actually translated to broad-based welfare?
Very important.
Have the reforms been able to drive investment growth? And so what exactly is going on? Us being able to complement most of these gains we've talked about, because most of the gains are being driven by policies from the CBN. In area of the fiscal, to what extent have we made notable progress? To what extent have we been able to achieve the set targets in our budget? To what extent have we been able to achieve our revenue targets? To what extent have we been able to finance projects? To what extent are we able to grow our investment position? Not just the FPIs, the FDI stocks are critical. So to what extent are we able to achieve, when it comes to the tax, a lot has been done, but it's just announcement. So these are areas where we believe still have some questions which the report notes.
Proshare is also forecasting a shift to sub-national regionalism in 2026. This means that subnationals and the regional level will be critical to driving national development. What led to this analysis and insights from the report?
So thank you very much for that question. It's a critical question. Now, what we know is that there were a lot of reforms from the national and federal government. Now, the subnationals, the states especially, most or a lot of states were seen also carrying out several initiatives, policies, and efforts, their internal efforts to complement the gains from some of these reforms. So what that shows is the critical role of sub-regional economic contribution to overall development and growth of our nation. Now, a system which is centralized and federally driven or federally controlled, we believe may not be what maybe so beneficial or help us achieve what we want to achieve in terms of creating the impact in the lives of Nigerians. The sub-regional governments are closer to the Nigerians, to the people. So we believe that they would, and there is every possibility for a power shift, because the discussions this year in that area was so enormous. And going into 2026, we believe that states will serve a crucial role to drive growth. In this year, we saw that the government actually gave the states, every region actually, a very, very important instrument in form of the regional commission. The North Central has, the South South, the Southeast, every area has their regional commissions now. There are higher allocations to states because of the subsidy policy. The decentralization going on in the electricity sector, is it discussions around state policing? Is it discussion around the need for direct allocation of funds to the local governments so that they administer it? So the fact that there was more discussion and more effort put shows the critical role of these states. We've seen so many states also put so many initiatives. Enugu State, for instance, the Enugu Air, the 135.5 kilometer rail project, which they want to, connect Southeast states to the Onne port. That's a massive project. And several other states, CNG initiatives, terminals, and all of that. The Ibom Air in Akwa Ibom, all of those are projects going on. But we also caution that despite this sub-regional government serving or being in a position to be the powerhouse to drive growth, there is need to be caution, for us to remain cautious in area of, one, duplication of projects. There is need to be caution on who mans those commissions and our government, and the ability of these people to deliver. It is not the first time Nigeria is going to have talks around regional commissions. We've had regional commissions there before, but what did they achieve? So are we just going to maintain status quo and we've created something and, what new is going to emerge? Those commissions are very critical, but what happens next? How are these commissions going to be funded? So we believe that despite the fact that these regional commissions being in a position to drive growth, there are challenges. The manpower, the fact that there is need for more harmonization among states, the people who man it, we need capable hands, we need credibility in that system too. So our report basically highlights this, and we believe that by next year, we would see with more focus, more energy in this area and some of these concerns, a lot could be achieved in that regard.
In your report, you highlighted some of the key sectors that will drive Nigeria's growth in 2026. Can you elaborate further on this?
We've spoken about some of the benefits that have come out of this series of reforms. And one thing I believe needs to be mentioned is the fact that we're seeing recovery in terms of growth. We're witnessing growth acceleration. And the performance of sectors is crucial to what drives growth. Over 65% of the growth we recorded in every single quarter of this year was driven by basically 4 to 5 sectors. The poultry, livestock, real estate, and the oil. These sectors were the areas that really drove and the ICTs, of course, drove our growth. Over 65%. Now, if we have 42 sectors and you have just about 5 or 6 sectors performing, we need to ask what is happening to the other sectors. But what we basically point out is that there are so many sectors. Our report does a recalibration of those 42 sectors into 14 economies, 14 sub-economies, exactly. And our reclassification shows what Nigeria needs. And that what Nigeria needs may also determine the sectors that are crucial to this. First is the fact that Nigeria has a liquidity problem. Long-term financing is crucial. So the sectors which will be very, very important in this regard are the financial services sectors, the digital trading sectors, the capital market, which Proshare has echoed over and over, has a crucial role in bringing about long-term financing, because the capital market will serve to attract, it's actually where the states could actually list their assets. The government could list its assets. The BPA has indicated that they want to take over 90, assets, state-owned assets to the market. It's a good move. Recently, we saw Lagos state government go to the market, list about 200 billion, issued about 200 billion naira conventional bonds, 14.8 billion green bonds to generate money. But beyond this, Lagos State has assets too, which we believe that if taken to the market, could be source of sustainable liquidity for the government. Actually, our report forecasts that by 2026, we won't just have more conversations around this, but there will be more actions because it is an opportunity area. And states and the governments generally should take advantage of it. Other sectors we believe would be crucial is the agri sector. Because the agri sector is crucial to what happens to food security. What happens to the sectors like the infrastructure is also very important. When you look at our talent management sectors like the arts, entertainment, economy, they are very important. Where is the place of our blue economy? Those are very critical sectors we believe should be given absolute attention.
2026 is a pre-election year, and every pre-election year comes with its own attendant risk. From this Proshare report, what is very critical for this current administration to prioritize to ensure that we still have sustained macroeconomic reforms that translate to stability?
Well, it's a case of the politician being in a pre-election year. Will his mind be more focused on the politics of it or the economics of it? There must be a balance. So I think the government needs to ensure policy credibility. Fiscal, in area of fiscal, monetary, and everywhere. Reform consistency will be crucial. So what happens is, there are tendencies that in a pre-election year, we may see fiscal, leakages, the possibilities of fiscal leakages, high level of FX intervention, not from the official markets, if I may put it that way, but high level of FX intervention because of spending in FX, which is what we saw in the last pre-election cycle. And, many other consequences could emerge because the politician wants to try to, get votes. So you may see populist reversals because you want to try to appease certain group of people in order to get the votes you would want. So I think these are some of the risks, and ensuring that these are avoided will be very critical for the government. So the government needs to focus on sustaining this stability. The government needs to focus on reform consistency. The government needs to focus on sustaining this gain it has, made, because 2026 has to be a year where the fragile recovery we've seen so far, it shouldn't be a waste. We need to capitalize and build more, give it more momentum so that people would appreciate. And then it should be a year where the government listens more to the people with its social targeted interventions, not subsidies, but,
social targeted interventions.
Yes.
I mean, sectors that have impact.
Improving the welfare of Nigerians. When we talk about what is going on in health, if someone hasn't landed in the hospital, they may not really appreciate what's going on.
Yeah.
What is going on in health? Education system, what is going on there? In terms of people's ability to get employment, what can we do to help people? What can we do to help people who have businesses, the MSMEs?
Yeah.
Proshare wrote about that too earlier this year. So these are crucial areas that need attention by the government, and it will make a lot of sense for the government to not just focus on the politics of it, but give a balance to ensure sustainability of the recovery we're seeing.
In conclusion, Terver, as of course, I have to wrap this up as we brace up for the Christmas season, and of course, the New Year is just few days from now. What is the outlook for 2026? What are those critical developments from policy to reforms that will have impact in the year?
Well, definitely, I think I would ride off what I just said now. The fact that we've had some recovery is indicative of the fact that there were a lot of gains made in some areas. So what could be done is to give attention to why what did not work. What could also be done is to recognize the fact that there are certain institutions driving the recovery we're seeing, such as the CBN, the fiscal authorities, and many others. These institutions must be protected. What could be done is also crucial when you talk about areas like the tax reform. How do we manage the post-implementation risk that may emerge? What could be done is also to ensure that we have a whole of government approach. Because if we have, for instance, a tax reform which is filled with so many beautiful things it could deliver, but upon implementation, you discover that other areas, such as what is going on with your investment policies, what is going on with levels of insecurity in the state, no matter how you tweak your tax reforms to attract investment, if the conditions are not favorable, will investors want to come? So the question the government must ask itself, very important questions. What did not work? Why did it not work? And what strategies could be in place to make them work? As well as trying to target areas which could have direct impact on the micro segments of the economy. Reforms have not translated into that broad-based welfare, as we mentioned earlier, because the recovery is fragile. So what could be done to also strengthen and give more momentum to this recovery? The politics of it is also very important, because the government, the politician has that tendency to always put his politics first. But the economics should also matter as much to the politician, because the politician may want to give policies that, in situations where they favor the politician, you will see policies tilt towards that kind of. If that could be avoided, that was what we talk about, policy credibility. The need to sustain, reform transparency, fiscal transparency is very crucial. What's going on with our budget is very important. Our budget position is really opaque. So we need to actually give more attention to that. The CBN side, when we talk about the monetary, there are risks there.
Yeah.
Our reserves are growing. But what is driving the reserves? Of course, we know FPIs have been high. The CBN went to the capital markets. The government went to the international capital market, issued some bonds, and got some. But is it debt that is driving the position of our reserves, or can we have equity finances? Can we have talents out there which help to pull a lot of remittances and dollars in it? Can we have more of Dangotes? Businesses like Dangotes encouraged. That's what we need to attract. A Dangote is from a domestic investor, not a foreign investor. Can we have more of that from? So the government needs to give more support through its regulations and incentives and create a climate where businesses do better.
I really enjoyed this conversation around Nigeria's 2026 economic outlook, hope, and politics of economic recovery, especially the things we've highlighted, the need for us to see reforms translate to broad-based welfare of the citizens. They need to see policy credibility, especially as we're looking at the 2026 budgets, stemming from what we've seen in the 2024 and 2025 budget implementation, and also the Nigeria Tax Act implementation in 2026, which is much debated across the country. These are some of the critical layers, and including the need for an enabling regulatory and policy environment to attract investments beyond Alhaji Aliko Dangote and what he's doing. We need to have other investors committed to growing our economy based on our investment environment. Thank you once again for the time, Terver Audu, and Merry Christmas in advance. And we hope to have more of this conversation on the economy. Thank you.
Thank you. Thank you.
To our viewers, if you want to get further insights on this conversation and also assess the report, 2026 Economic Outlook report of Proshare titled The Hope and Politics of Economic Recovery, visit the Proshare website displayed on the screen and follow our social media platforms to engage further. Until we come your way again, enrich yourself with knowledge of socioeconomic developments around you. It is wise. I'm Ottoabasi Abasiekong. This is wishing you a Merry Christmas in advance. Thank you for watching, and bye for now.